Hey everybody, Rowan Smith from the Mortgage Center. There's a program that a lot of people are aware of, and that's the Purchase Plus Improvements, or getting renovation money when you try to buy a place. These programs have been around for a long time, and they're a little admin heavy, and depending on your bank, there may be even more administration you have to do. I want to explain how the renovation money works, especially if you're putting less than 20% down. If that's the case, putting less than 20% down, you're going to involve CMHC. So here's how the process would work. Let's assume, for the sake of argument, you buy a $100,000 home. You want $5,000 for renovations. What you have to do is get a quote during your subject removal period. So before you even get an approval, you need to get a quote from a contract that itemizes all the work you're going to have done and the estimated cost. You will then provide that to me. I will provide it to the lender. And when the lender sends it to CMHC for approval, because CMHC approves all deals, or a mortgage insurer approves all deals with less than 20% down, they'll look at the purchase price, they'll look at the value that you're adding by doing these improvements, and assuming that they're reasonable and they're not too high a percentage of the property value, generally 10% or $40,000 kind of, if you go over that, you may end up having to treat it more like a construction mortgage. But if you're within those confines, so you're trying to borrow less than 10%, in our example of $5,000 on $100,000, you're borrowing only about 5%, CMHC will then approve the deal, assuming you qualify for that extra bit of money. Now, if you think about it though, Canadian maximum is 95% financing. So you have borrowed 95% if you're putting 5% down, plus another $5,000. You've effectively borrowed 100% of the purchase price. So the bank is assuming that you're going to have added that value to the property. That's the whole purpose of the Purchase Plus Improvements. Now, when do you get the money? You're not going to get the check cut to you so that you can go pay cash to your contractors and get a good deal. You have to pay a contractor to do the work, or you have to provide all the receipts for all the materials. You can do the work yourself, but there's a heck of a lot more paperwork. You've got to track everything. Every time you buy materials, you've got to itemize it all, keep a good running account of it. If they've offered to give you $5,000 for it, they're only going to give you $5,000. You can't be going back to the trough later on looking for a little bit more. Now, so two things. First, you got to have the quote up front when you write the offer, or not when you write the offer, but when you are trying to get the mortgage approval of all the work you want to have done. It means your contractor's going to have to go through there. Two, the funds don't get released to you right away. You pay interest on them, and they get released to your lawyer or solicitor handling the transaction on the closing date. You have to then go get the work done and then prove it's done, either by way of an inspection or by receipts, and that depends based on which institution you deal with. At that time, the lender will authorize the lawyer to release the money to you. So, in summary there's 3 steps, and this is why it's admin heavy. Get your quote, get the approval. Once you've got the approval, you buy the home, you now do the work. The work has to be paid for somehow, either on your lines of credit, on cash, or you have to find a contractor willing to do it on credit for you. 3, once the work is done, you get the lender's representative to authorize the release to the lawyer. The lawyer then gives you the money. It's a painstaking process, but it's the only way, if you're putting less than 25% or less than 20% down, that you can get renovation money. Alternatively, you can go and get an unsecured line of credit, but you'll be borrowing it at much higher rates than mortgage rates, which are secured. Don't expect a prime rate personal loan, or a prime rate or below prime rate personal loan or line of credit unless it's secured with a mortgage. So if you know anybody in that situation, looking to buy a place, looking for renovation money, I can guide them through the process, explain how it works, and try to take some of the mystery out of it, because there's so many steps it can be very aggravating. For the Mortgage Center, I'm Rowan Smith.